Nigeria's rising debt profile, despite improving government revenues, presents a critical challenge that demands urgent action focused on transparency, fiscal discipline, and rigorous oversight to maintain debt sustainability. The Speaker of the House of Representatives, Tajuddin Abbas, sounded the alarm at a recent public forum, revealing that Nigeria's public debt had surged to 149.39 trillion naira. That's approximately $97 billion by the first quarter of 2025. This escalation pushed the debt-to-GDP ratio to 52%, significantly surpassing the recommended ceiling of 40%. Joining us on the show to discuss the rising debt profile and medium-term debt strategy is Tilewa Adebajo, Chief Executive Officer at the CFG Advisory. Good morning and welcome to the morning show.
Good morning. Good to see you back.
Good to see you. Thank you.
Good being back.
Always
good
to see you.
Yeah.
Back as well.
Yes.
Good to see you. All right. Debt. I want to call you the debt police because usually when we have you on the table, it's either you're talking about ways and means or Nigeria's debt profile or the alarming rise in the debt profile. Now you see where we are. So your alarm, you sounding the alarm, was very apt. We have 52% debt to GDP ratio, far above the 40%. And it looks like there's no, even though the president say we're not borrowing anymore because they are doing well with revenue collection. However, to prevent our debt profile from skyrocketing, what are the ways that we must immediately begin to adopt to manage the debt situation in the country?
Thank you very much. Good morning. First of all, I think what is important to understand that, first of all, Nigeria's debts, we're not yet in a debt crisis. I think it's important for us to stay, yes, we're not yet in a debt crisis. But clearly what has happened is that we have violated some of the tenets of the Fiscal Responsibility Act. So what that means is that there is an urgent need for fiscal reform. And in terms of that urgent need for fiscal reform, there was a medium-term debt strategy session that was normally done. Now, the medium-term debt strategy is a tool which the World Bank and the IMF uses to be able to ensure that your debt is managed in a sustainable way. And going through that analysis, I think we came up with new parameters. So I think what is important is that we now need to look at some significant fiscal reforms in Nigeria. I believe that the fiscal reforms are even more important than the tax reforms. And I believe that the fiscal reforms should have come first before the tax reforms. Because as Rufai was saying earlier in the program, a lot of the savings that we've made from the subsidy is going towards debt service. Yeah. And debt service is the #1 item now on the government list. But having said that, like I said, I think it's also important for us to know that it's been 2 years. We also need to change the narrative from the media. And we need to redefine the economic narrative in terms of where are we and what we need to do. It's been 2 years since the Minister of Finance was appointed, which was in August last year. The Minister of Budget and Planning was also appointed in August last year. And the Central Bank Governor was appointed in September last year and also confirmed by the Senate in the same September. So it's been 2 years since they have been done. So it's important for us to look at a reset and redefine the narrative. Yes, we do have this alarming debt profile, but for me, as you said, the fact is that we are not using ways and means. The administration started earlier by drawing down about 7 trillion on ways and means. That has stopped. And because we are not using ways and means, we have achieved the stability you are seeing in the economy today. Most of the debt that the government is using are market-based securities locally. And of course, abroad, you are looking at the Eurobond markets, and those are determined by our credit rating. So a significant, and because of the inflation management, interest rates are quite high. And what you find out is that savings are being mobilized, and a lot of Nigerians and investors, pension funds are having a good time now, and they are making investments in treasury bills. So for people who are making investments and saving, it's a good time for them in the economy. So what we need to start looking at now is that we need to grow the economy. And we need to start focusing on the micro issues. And I think that really this is where the challenge is right now. And yes, of course, these are the things that are there. But the fact that we are no longer using debt, we're no longer using ways and means, we've achieved stability. And you can see that the exchange rate is also quite stable. And I think we can discuss that much later.
So let's deepen this conversation around debt.
Yes.
Because like Ayo mentioned, the president had made that, shared the information rather, that we're no longer borrowing from local banks. That was the clarity that was given by the presidency, which is that when he said that there's no longer domestic borrowing, it's that they are no longer doing it from the local banks. Because we know that last year that spiked up, I think, by about 90%. There was a high rate of borrowing domestically from the banks. Having said that, if we're focusing on the bond market and so forth with regards to domestic borrowing, and then we look at all the various modalities we're using for international borrowing.
Yes.
Given our country's profile, what is the healthiest way for us to borrow? Because some people might say that, but we're better off borrowing locally, aren't we? So
not really.
Because we're going to borrow. So who should we be borrowing from?
Well, let's correct some misconceptions, which is what I'm trying to say, that we need to reset the narrative. I think we've mismanaged the narrative on the economy. And I think we are not really looking at the goal and what the objectives should be, because we're taking snippets from here and there. We do not borrow that. Government does not borrow directly from the local banks. Okay, the way the capital markets work with government borrowing is that we have a debt management office, okay, which manages the government's borrowing program. So the debt management office already has a program for the year as to what its borrowing is and what it's going to do. So don't forget that this is a dynamic process. Some loans that the government took 3 or 4 years ago are already expiring this year. Okay, so when those loans expire, government now has room to borrow more. So in any given year, you will have a situation whereby you've paid off some old loans and then you're taking on some new loans because it's a dynamic process. So the debt management office was set up for this specific purpose to help government manage its borrowings through the capital markets. And basically the instrument they normally use are the banks, because the banks, facilitate this through the capital markets and they issue the bonds and the treasury bills which they borrow. The other way by which the government borrows is through the open market operations, which is more of a monetary tool, whereby the central bank decides to offer banks instruments in order to control money supply. If they want to increase the money supply, depending on the way they're seeing it, that's there. So let's correct that. Borrowing from the local banks is a dynamic process. Primarily, your domestic, 60% of our debt is domestic and 40% is dollar denominated. So that's the mix of the Nigerian debt profile today. So when you say what is optimal, it depends on what you want to do. If you want to do a project that is abroad and you can feel you can use your dollars to do that, then you can use that.
You want to industrialize and grow the economy. So for Nigeria, what is optimal?
For Nigeria, what is optimal is not, there's no optimal, because even the best loans you might want to get for Nigeria are probably the World Bank loans. Because they have like 30-year loans and they are concessional with maybe low interest rates. So if you have a big infrastructure project you want to do, you're probably better off borrowing from the World Bank, because you can get a better deal on the World Bank as opposed to the Eurobonds, which depends on your credit rating. And of course, if you look at domestic markets now, depending on the conditions of the market, treasury bills are about 24. So that's why with high interest rates, it's at a high cost to government. So trying to even manage inflation is a big cost to government because they need to pay higher rates. So it's always in the interest of government for us to get through resolving this inflation problem and cutting interest rates.
With due respect, Mr. Tilewa Adebajo, you're my very good friend and Egbo, but it's not good on us to you to say that we media are skewing narrative. It's the government you should talk to. President Tinubu has come on many occasions to distort the narrative. Was I the one that said when we came in, Naira was 1,009? Was Naira 1,009? No, it's President Tinubu that said it. President said we have met our target. Anyway, he said, okay, non-oil. Was I the one that said that? No. When you also look at the fact that the revenue target for this was about 41 trillion. So even if we met non-oil, okay, we did about 17, 18 trillion, you see, have a big shortfall. Was I the one that came in here to say that we've paid off ways and means when we've just securitized it? No. So with due respect, it is them that bring all sorts of this phony narrative, and we even try to even get through the dirt of the narrative. So their comms should be a whole lot better. So maybe it's an advice for CBN and all of them, that their comms should get better. If their comms get better, we all get better. I want to talk about some encumbrances we have in this economy. Recently, President Tilewa has gone to the bond market again. The bond market is about 4 trillion. They say they want to use to pay people that are owing money for electricity. Electricity people. Yeah. The electricity people are coming to say that the DMO's provision, what is remainder for the debt they can take this year is about 900 billion. That they are not sure that the president is going to pay fully this 4 trillion. And they said the money is even increasing as we speak today. And the money can get up to 6-point-something trillion. How do we settle these matters out? Because we also need that area to be able to function properly, for our economy to be able to get stability. They say most of their gas suppliers, they don't have money to pay them. That over 70% of their component cost is for what they use as fuel input to produce electricity. So how do we really go through matters like that as regards balancing debts?
Well, like I've told you, the media also has a responsibility to sift through and separate the wheat from the chaff. And that is why we have this sort of discussions. So even if the government, yes, I agree with you that the government needs to be able to coordinate their economic policy narratives much better, because it comes out in dribbles and we don't see a coordinated approach. So I agree with you on that the government is not doing a good job in communicating a lot of his narratives. Even in areas where they might be achieving some sort of success, they're not able to tie it up together. So as you said, that is a problem from the government side that they need to address in terms of what the central bank's narrative is. Central bank cannot just concentrate on monetary policy. They are not focusing on, they should be more aggressive on their inflation targeting. They're not doing that. Because for us to move forward, inflation has to come down. Yes, I agree with you on that 100%. As far as the debt is concerned, the approach to the bond market is very structured. That is why the Debt Management Office was set up. And if you take a look at how the debt management was set up in 2015, when President Obasanjo did the deal with the Paris Club to pay off our debts, to reduce our debts from he reduced the debts from 30 billion to 5 billion in 2015. So as part of that process, what was done was that the debt management was set up, first of all, so that all the debt could be reconciled and be honest. Because at that point in time, we didn't even know where all the debts were. So the Debt Management Office was set up for that purpose. Then we set up the Fiscal Responsibility Act, which talks about the fact that you cannot borrow some things more than the GDP. And now, that Fiscal Responsibility Act is what needs to be reviewed. Because clearly, because of the pressures of COVID and the pressures of the global economic pressures we face with COVID, and now these post-recession issues, you have a law that was done 2015, 2016. You need to revise it to be able to reflect the current realities, because you know that our debt to GDP ratios can no longer do that. So the government also needs to urgently set up the mechanism in process between the Budget Office and the Ministry of Finance and the Central Bank to review that. Part of that process of when Obasanjo got that debt relief was also what put in Section 38 into the CBN Act, that they cannot use ways and means. And those were all the financial circuit breakers that were put in the system.
And they broke it.
Yes. And we know what happened under Emefiele. You know my own position on that. And the reason why we have stability today in the economy is that this government, whatever you say, they have not used ways and means. Because if they do, I will be the first person to come out and start waving the red flag. So that's why I told you that in terms of the debt issues, I'm more comfortable with this debt profile, because they're using market securities, both locally and abroad. So even if the government wants to do what you are saying with the bonds to pay off this, it has to go through a process. Because the Debt Management Office will receive that request of funding from the government, and it has a program. So because you know that the securities are offered on a regular basis. The last offering was there. So if they want to borrow more, at the beginning of the year, what the Debt Management Office says is that which debts are maturing this year, next 2026. So you know that, okay, by this end of this year, we would have finished paying some of the debt that we borrowed maybe 4 or 5 years ago. So we have headroom for some more debt next year, and then they will know what is available and they will do that. And then that way they can go and borrow more. So even if the president has a request for that, if there's no capacity within that Debt Management Office structure with the capital markets, it can't happen.
Yes.
And that is the reason why I say that no matter what they wish, if we continue to follow the debt management structure, we'll be okay.
So you can now, you see, God bless you. You can now see a clear example of how we are being misled on economic matters by those at the top. The president said we are going to clear these 4 trillion debts being owed people. The Gencos said by their research, they said the allowance is not more than 800 or 900 billion that the DMO can access from the capital market through the bond market. They are touting it as a victory now that, oh, we are going to clear the 4 trillion. The money will not be cleared this year. The debt will increase. At the end of this year, electricity debt will go to about 6 trillion. So you cannot see the misinformation. Somebody will have asked that before the president made such a pronouncement and media reported that meeting, why didn't they consult with the DMO to say, what is the allowance we have before we make this announcement, or say we are going to stagger it based on the allowance we have from DMO? That is not done. What was reported to us that we amplify in the media is the president meets with them, will clear this debt by issuing a bond. You can see a classical example of how they feed us all this information.
They can feed you that information, but we're also discerning.
No, so we've blocked it now.
Do you understand what I'm trying to say?
But that's what we're doing now.
That's what we're also discerning. So there's a process. If he says he wants to clear the debt, then the next question is how.
It's not possible.
No, that is not possible. The question you ask is how.
Yeah, but is it possible?
It's not possible this year, which was we've analyzed.
Not this year, because there's a program. So you now put it, then has it been budgeted for? Did you make any provision for that? You see, there are many things you look at. You see, what I'm trying to explain is that this is what I'm trying to say about accountability.
Yes.
You have a budget. There's a system. There's a budget. There's a management. So when you say that I want to do X, Y, Z, the first question is that, was it in the budget?
No.
If it's not in the budget, it can't happen.
Very good.
All right, thank you. So now let's look at some of your findings. And I think your report is a must read. The 2025 half-year economic update. There are a few things you said. Let me focus. I won't look at the things that are working because we're here to find solutions to problems.
Yes.
You talk about a decline in GDP growth quarter 4, 2024 to quarter 4, 2025 from 3.4 to 3.1. And this is an economy that is set to have a $1 trillion economy by 2030. Then you also talk about social intervention programs not working and that there must now be a human face to reform. I'd like you to discuss, a lot of people are more concerned about these reforms that are hard-biting and then no reprieve for them. Numbers are good. We can talk about that on the table for the economists. But for a number of Nigerians who are watching, they are wondering, when will life be better for us? Or if these reforms that you have talked about that had to happen for the stability of the economy, then what cushion has the government provided for us? Because that's one thing that has been talked about a number of times. And you've said it, that there's even reform fatigue. Reforms upon reforms upon reforms. Let's have to talk about, now that we've achieved some stability, what are the cushions? What are the social investment intervention programs that the people can have as a reprieve before we begin to see gains in the economy?
Thank you very much for that question. Yes, I think for me now, we need to start looking at that's why I said I need to start looking at the micro issues. Yes. We have to look at how are you going to grow the economy? Yes. What is the empowerment, employment, so that people can begin to benefit. Okay, because at the end of the day, the central bank really has to cut rates by fourth quarter. We have endured this for 2 years. We've supported them for 2 years, but you need to be more aggressive on your inflation targeting. Inflation data is distorted. Now, let us see what happens in the MPC committee next week to see if they have the confidence in the numbers to be able to drop rates. But having said that, let me address those issues you've talked about in terms of reforms alone is not the solution. Reforms on themselves cannot be the solution or answer to growing the economy. And this is what I'm talking about, the narrative and what the benchmark is. If you take a look at the research we've done over 30 years in Nigeria, GDP growth of 8 to 10% only happens when inflation is 12% or lower. It's a statistics for Nigeria. So if you cannot get inflation to 12% on a real basis, you cannot achieve that growth. The 1 trillion economy we've talked about, we started talking about 1 trillion economy here. We said Nigeria already has a potential of 1 trillion economy. 1 trillion economy is a mirage. We shouldn't go there again. We should stop talking about that is the potential. I believe that Nigeria is already more than a $1 trillion economy. But that is the potential of our economy. But if you do not have your policies in place, you cannot reach that 1 trillion economy. And like you said, yes, there has to now be a human face. But surprisingly, some data came out, which I sent to you. And I think I circulated within my broadcast group about the intervention program, which you talked about why government is not communicating the information. I just stumbled on this information and I saw that apparently they have been doing a lot of work with the intervention program. What has slowed it down was the fact of the verification of the NIN and what's the other one they use? BVN. BVN. So basically they're verifying NIN and BVN to ensure that the people that they're paying are looking at, because their target of 15 million households, I think they've already gone to about 60% of that. And I think I sent you that report. Yes. So when I saw that, and I said, okay, why is this information not in the public domain? Because this is really what is important to help people. But to help everybody as a whole in Nigeria, households, companies, and everybody, if inflation comes down to 12%, everybody in Nigeria will benefit. Mm-hmm. We can now have our purchasing power. Mm-hmm. We can stop being a sachet economy and all that. So that's why I'm saying that the priority for Nigeria today is for us to get inflation to 12%, and then our middle class will re-emerge. Because right now we have eroded purchasing power. We have wiped out a lot of people from the middle class. So and that's why I'm saying that the onus now is on the central bank to aggressively pursue their inflation targeting strategy, and government really needs to begin to cut down on expenditure. Because if you look at core inflation, which discounts food inflation and energy inflation, the key driver of inflation now is government expenditure. So government needs to control that. There's need for fiscal reforms, and then we look at that. But again, another thing that has happened that I'm quite pleased about now is that the Minister of Finance now has to issue a certificate before you go under any expenditure. So that is also very important. And another macro issue, which I just also found out, was the fact that they have now identified in all the words. I think the National Economic Council just came up with, they just finished the last National Economic Council meeting. They now agreed that there was going to be intervention at the ward level. So there's now going to be a cooperation between the federal government, the state governments, and the local governments, whereby they're going to identify 1,000 promising entrepreneurs within each ward and begin to do direct intervention at that level. Now, these are the things that we need to see, because that is what you do at that level to be able to put that human face to your reforms and to be able to stimulate growth. We need to start looking at the micro.
Can I just say, just for these numbers you're saying, I understand communication and for us to hear about it, but I think more than hearing is to feel it. And maybe that's why there's a conversation around, it's not happening. You can release reports about, we are doing, but if we don't see the impact, then it doesn't matter. So I understand the need for communication, but the best communication are the people, impact, seeing and feeling the impact on the people. That's what we are not seeing yet. So I even believe more than the communication you're talking about is to see the impact. There's no point spending money on social intervention programs when we don't feel the impact or see the impact, is what I would say. That's the best form of communication.
True. And, like I said, it's 2 years. And that's why I'm saying that it's a midterm economic review that needs to come out to be able to say, okay, these are where the impacts are. But if we sit down here, we're doing the analysis, these are the things that we're bringing out. We understand that what we can see in terms of numbers is we all acknowledge this economic stability. We all acknowledge the fact that the exchange rate has been managed. But now the question now is that how does that begin to impact to grow the economy? Yeah. Because our growth, as you said, is actually declining.
Yeah.
Yes.
From 3.8 in fourth quarter to 3.1. So that's a concern that our first quarter GDP growth is declining. And then, of course, inflation is still not under control. So those are the two dynamics that we really need to manage. So like I said, for us to feel the impact, inflation has to reach 12%. Then you can know that whatever naira you are holding, you can get more from it.
Yeah. This is a paradox of stagflation, though, because we here advocating for CBN to cut those rates.
Yes.
Everybody's praying for it,
yes.
So that we can stimulate the productive sector.
Yes.
But ultimately, you keep referring back to inflation targeting, and that's their way of inflation targeting is to keep the rates high. So, what are the policy tools that you think CBN now needs to implement to try and rein in? Because it seems like CBN is doing all they can possibly do. The government just needs to cut spending. What can CBN still do? What's available to them?
CBN needs to give us the inflation targeting. Inflation targeting means that by December, I expect inflation to be at 15%.
But that needs to be done through a policy tool. So I'm saying that right now, the orthodox economics says that it's interest rates we're using.
Yes, that if you're
but
using,
we want them to cut. But we want them to also cut inflation.
Yes,
it's a paradox. So
yes, you understand that paradox, which is what I'm trying to say. And moving back to the path of sustainability, I understand that. We all do.
Yeah.
So, but what I'm trying to say, and I think, which her point was always, because she's always a very social human being person, because I know when I'm going, she wants to look at the social impact, how are people feeling, very important. So if we say, okay, we're going to all band together and we've been suffering this for 2 years, at some point in time, we're going to have to say, okay, guys, we need to start providing some relief. Which is what I'm trying to say. Okay. And that is really what we really need to do. So
but you still haven't told me which policy tools you want the CBN
inflation targeting means that CBN will have to tell us that they expect inflation to be at 12% by August next year. And then they work towards it.
At some point in
that is what I'm trying to say. That's the inflation targeting
like
is a tool.
Chicken egg,
it's not, there is a tool.
Understand.
You set those expectations, then you aggressively begin to tighten. And you've been tightening for 2 years.
Yeah.
Okay. So government also needs to, as you said, government needs to cut down the expenditure to help us reduce inflation.
Okay. So yes, easy to tighten. You see, it's so funny how down this country has gone that we forgot at a point in this country we used to have an inflation target of 9% of the CBN. Yes. But those days are long gone today. Single digit. And that used to be the target, 9%. And those days were just the days where Sanusi was in charge of the CBN here. But you see, I can see when Viba is asking you that question, you're struggling because it's a very big paradox. In one breath, we want productivity. And when we want productivity, reduce rates. But in another breath, we are fighting inflation. And we need to tighten to be able to get those rates down. So it's a paradox where if you go here, you are doomed. If you go here, you are doomed. But we want productivity. You have said some things. Sell off some of the JV assets and everything, get some cash clearance. When you get the cash clearance, what do we now then do for a government, again, that has not shown signaling of prudence in spending? Because when all of these reforms started, this was the same government that was concerned about buying a private jet for the president of 150 billion, when that money could have been targeted to SMEs. This was the same government that said after it removed subsidies that it was going to bring about loans for businesses and other people and everything. So even if you free the cash in this economy, $50 billion you're talking about, how is the money going to be spent?
And well, you see, for me, that is where the fiscal policy comes into place, and which we've talked about fiscal reform. The fact is that you asked me about those solutions, and I've told you what those solutions are. And let us remember that there was a time in this country where inflation was like at 10% and the economy was growing in excess of 10%. Yes. So we've done it before. So it's not as if we cannot do it again. Like you said, we've stopped ways and means. We're seeing that exchange rate now has gone to 1.4. I believe the exchange rate should be trading below 1,000. If you look at the supply of dollars and everything in the system, reserves at about 40 billion. You're seeing the level of, we're looking at 8 billion coming in net. So the supply of dollars is less. And 40% of the deposits in Nigeria today are in dollars. Yeah. So there's a lot of confidence in our domiciliary accounts. So we have achieved a lot of stability. So what I'm trying to say is that it now requires commitment by government to reduce their fiscal expenditure for us to reduce inflation to 12% and get the relief we need. Right. That is the bottom line.
So the paradox is you're giving a government that has shown penchant for spending in a very permit me, reckless way. You're giving them more money if you clear out all these allowances, 50 billion. How they spend? They will go to town.
Right.
That's the problem we have. So it's a commitment. Thank you.
There's a lot to talk about, but we're out of time, and I'm sure that the conversation continues on the economy, spending. Will the government take that lead on cutting spending? Like Rufai mentioned, they want to go to town. If there's more money coming in, then it's an opportunity to really spend. But we'll see what the MPC meeting next week would come out, whether they would cut rates finally or tighten it even further. Thank you so much, Tilewa. Always a pleasure having you on the show.
Thank you.